Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis video for the weekend of July 22nd and July 23rd, 2017, with about 45 minutes to go before the market closes for the week. Take a look at how markets are trading. So this is how some of the instruments that we are following are trading. We shall see how we close. Let's take a look at those charts. And we can begin here with the Nasdaq, and we can see that the Nasdaq is working on its follow through. In other words, it broke out last week, and this week we see a follow through with a positive close above the previous weekly closing high, and that was at 6305.80, going back to this week right here. So a good breakout. As long as the market is above this price, then it means that the market still has upside momentum. To see whether the market is going to move higher, the real test is going to come if the RSI can hold above 69.1. The more we stay above 69.1, the more this market continues to be strong. Right now we are trading just a tad bit above 69.1, so we shall see. As the weeks go by, the more we hold above this threshold, the more the market should continue being strong, stable, and also outright bullish. Now on the weekly, we see that the breakout fails at some point, and if the RSI moves back below 69.1, that would be visual evidence that the market is due for a pullback. Now if we take a look at the Nasdaq Daily, we can see also on the daily, clearly here, we've taken out the previous daily closing high, and the market continues to hold above that previous daily closing high. The level that we were watching for a daily breakout for the Nasdaq was 6321.76, going back to this daily closing high from June of last month. So the breakout continues to be good on the daily. As long as we are above this price, the bulls are still in control. And let's not forget that on the monthly, the Nasdaq also is breaking out this month after 1 month of rest. That's a good breakout. After 1 month of rest, the number we're watching there is 6198.52. Now keep in mind, as long as we are holding above this price, or as long as the monthly breakout is still in effect, the market should be stable to bullish. Don't forget that we continue watching here the RSI, as we noted and have been noting over pretty much 2017. As long as the Nasdaq is holding its monthly RSI above 69.1, what that means is that yes, there are going to be pullbacks, but pullbacks are going to be shallow. Ultimately, the market should trend higher as long as the monthly RSI is above 69.1. And this is where now I take a little bit of a look at the previous move. So let's take a look at the Nasdaq going back about 5 years, just to show you what I mean by that for those who are new to this concept. And you can see here we held above 69.1 for about 2 years. 2 years above 69.1. That was good enough for this move here. And yes, we got pullbacks throughout this phase, but those pullbacks were shallow, short-lived. Market would ultimately grind higher. It's only after we cracked back below the 69.1 threshold here in 2015 that ultimately we get these deeper pullbacks. So now, as long as we are above 69.1 on either of the major markets, the Dow, the Nasdaq, the S&P, expect markets to do this type of action. Sideways at worst, bullish at best. If we take a look at the Dow, yes, it's down for the week slightly, but keep in mind that we are still breaking out. And more importantly, for the Dow, we continue holding above 69.1. So on the weekly here, what this tells us is that as long as the Dow is above 69.1, expect the market here to be sideways to bullish. A good example was this phase here from, let's call it about late November to about mid-March. which corresponds with this movement here, where the RSI held above 69.1. So as long as the Dow is above 69.1 on its weekly RSI, market should be showing signs of, yes, shallow pullbacks, but ultimately the bulls are still in control. If we take a look at the daily for the Dow, we can see that it continues to test the previous breakout, and it's been holding above that, and the level there was at 21528.99. So we continue holding above that. In fact, let me zoom in so we can see that it is actually coming back over the last couple of days to test the lows or to test the breakout. Seems to be holding above that. So let me zoom in from this 1 year daily. And here we have 3 months of daily data. And this is the breakout level here that I'm talking about. That was at 21528.99. Going back to this daily closing high right there. So let me draw a line. So you can see what happened here is we broke out right here. And since then we've had 2 attempts to break below that price. So far the market has held. You can see here we tested it, closed above it. Today we tested this as of Friday, and we can see that the market also went below that, but looks like it is going to close. We shall see where the close is, but as long as the market is holding above this price, then the breakout continues to be in play. Now, of course, at some point, should we break below that price, then that would be a failed breakout. Failed breakouts are notorious for taking markets lower. So we shall see where the close is going to be. For now, the market is doing its best to hold above 2158.99. Anything below this price would be a sign that the market is now losing some ground. Now, this would be similar to this breakout here, the prior breakout. And you can see that the market did break out, obviously. So we break out here, and we tested that breakout here and held. We tested it here and held. So right now the bulls are trying to show some, make some stand here, defend the previous daily closing high. So we'll see where we close, but anything above this would show that the market is still stable and that the bulls are still in control, and we should expect higher prices as long as the breakout is successful. Now, if we take a look at the hourly for the Dow, we can see that it is coming back as of Friday to test the lows on this RSI lows line, and so far those lows are holding. So one would not expect a major pullback until such a time as when we break below the line. So until we break the line, the market should be stable. If we break the line, then maybe we see a deeper pullback, or maybe even suggesting that we might see some short-term highs or major highs. So until the break, the bulls are still showing good support. If you take a look at the Dow from the hourly standpoint, as shown by this RSI lows line on its hourly chart. In fact, we can also see the same thing if you take a look at the Dow 30-minute chart. If you connect the RSI lows, as of Friday, we tried to move below the line, but the market held, which is the lows, intraday lows for Friday. So as long as the line is holding, we can expect the market to still continue being stable to bullish. I should also mention that the Dow continues to trade nicely above the bullish threshold number of 69.1. As long as it is above this threshold number, again, another indication of sideways at worst, bullish at best type of a market. Take a look at the S&P 500. We can see that the RSI lows line held, as we discussed the last couple of weeks. Once that held, that was an indication of potential intention to trade higher. This is exactly what has happened. S&P 500 also following through on its breakout, and it is a good breakout because now this is week number 2 after breaking out. So always want to see a follow through as a sign of a market that has intentions of seeing higher prices. The level we were watching there was 2439.07. We've cleared that previous weekly closing high with a good breakout. As long as we are trading above this price, market should be bullish to stable. And also as long as the S&P 500 continues to trade with its weekly RSI above 69.1, the market should continue being sideways at worst, bullish at best. Let's take a look at the S&P 500 daily, and we can see that after successfully testing the 50-day moving average multiple occasions this year, we continue trading in a nice uptrend. Also, we can see that if we go back to the breakout, going back to this RSI breakout here, once we moved above this, the market hasn't looked back. So we've been using that line for guidance. And so we take that information, draw our uniformity support line. Anytime we bounce on this line with uniform action, should be good enough for re-entry. Here we can see it bounce on the line for those lows. Double bottom here for those lows. Nice uniform activity bounce there for the lows there. And here we can see it held on the line for the recent lows right there. So it looks good. Keep in mind that on the S&P 500, we are also seeing a good breakout. In other words, we continue holding above the previous daily closing high. And that previous daily closing high is 2453.46. As long as the S&P 500 is above this price, one can expect the market to continue being stable to bullish. And of course, we take a look at the S&P 500 just like we have observed for the Dow and for the Nasdaq. As long as the S&P 500 is holding above 69.1 as it did here for almost 2 years, was north of 69.1 for this multi-year movement higher. As long as the S&P continues to hold above 69.1 in the current market environment, something it's been doing since somewhere here at the beginning of 2017, expect markets to continue being sideways to outright bullish. So far we've been discussing bullish aspects for the market. Let me change here and take a look at what could stall the market. We begin with the Nasdaq Daily. Back to the Nasdaq Daily, and we can see here that it is coming back to test the RSI topside on its daily chart. So take the highs of the Nasdaq like that. Right now we are showing evidence of resistance on this line. So the more we stall on the RSI topside, so let me do that one more time. The more we stall on this line, the more there's a chance that the market is due for a pullback. Now also, but we have to also keep in mind that as long as the daily chart is still showing a good breakout, this market is still moving to the upside. The number to watch there is for confirmation of weakness would come if the Nasdaq moves back below 6321.76, which is the previous daily closing high. In other words, bears would have to push the market below this price, and that failed breakout is what is going to spook some traders and potentially bring the market lower. But as long as we are breaking out in price, even this resistance that we are seeing currently on the daily chart for the Nasdaq is not as powerful, but it's something to watch. Also, we can also see that as of right now we are seeing early signs of an improvement to new highs, but the technicals are not following through, and that negative divergence can set the stage for the beginning of a pullback, maybe a shallow pullback, maybe even a major high. We shall see. Now we also see the same type of situation on the Dow. On its daily chart, we see an improvement to all-time daily closing highs, but this is coming at the expense of the technicals. So that negative divergence again could actually be already setting the stage for some type of a pullback, again maybe even major highs. But the key is to watch the previous daily closing high. In other words, watch the daily breakout because as long as the market is above the previous daily closing high, and again let me give you that number, is 21528.99. as long as the market is above that price and holding nicely and properly above that, we can see that it's what it's doing right now. That's good support. The market should be stable to bullish. At some point, should we break below that level, then that would be indication of a failed breakout and that the market is due for a bigger correction. It's another way of saying that as long as the Dow is above this price, market should be bullish. If the Dow is below this price, then market should be turning a little bit to the downside, because failed breakouts are notorious for taking instruments lower. Let's take a look at the Dow Hourly, and we can see on the Dow Hourly we did try to move higher here on an intraday basis, but that was at the expense of the technicals. That negative divergence already has led to a little bit of a shallow pullback on the hourly chart for the Dow. Keep in mind, on my hourly charts I am using RSI setting of 26. The reason being that I try and remove as much of the noise as I can. Also on the Dow, we have what looks like resistance if you draw the line like that. So we hit this level here and we've been pulling back slightly on an hour-to-hour basis. Now don't forget that this is countered by the previous observation that the RSI lows line are holding. So at some point, logic would dictate that we either break out above that line and move higher, or break down below this line to see an even bigger correction. Take a look at the S&P 500, and even here we can see topside RSI resistance. We hit that line over the last couple of days and the market is already stalling around that level. That's something to watch. The more that continues to be confirmed as resistance, the more we should expect the market to be due for some type of a bigger pullback. So keep watching that line for potential indication of where the market wants to go. Now, one thing I should point out here on the S&P 500 daily, we can see that there was a shallow high here on hindsight. There was another high somewhere here that led to a pullback, and another one somewhere here for a shallow pullback, and another high before another shallow pullback. So I'm talking about this pullback here, pullback here, pullback here, and pullback here. And these have some type of connection to each other. You have to go back to this break line. So this break in the RSI, once we broke below that level, which is this movement of the highs there, take that information, draw our line, and should be something like that. And what this line gives you is the highs. Resistance here for that daily closing high and a shallow pullback. Resistance here with a double top for this closing range there and a shallow pullback. Resistance here for a shallow pullback. Resistance here for this high and a shallow pullback. And now we've hit that line. So definitely looks like the market has put in the indication that there's at least potential for a shallow pullback, as long as we are showing resistance on this line, as we've been doing since about the beginning of March. Check the description of the video for a link that describes this method in detail. I call this method the uniformity method. So I paused the video so we can see how the market is going to close for the day and for the week as we get closer and closer to the last couple of seconds. Looks like the market is coming off the lows. No surprise if you take a look at what we've been discussing so far in this video, with the Dow holding the RSI lows line on the hourly as an example. And so we can see the close here. Market is coming off the lows of the day. So let's take a look at Dow hourly chart one more time. And we can see here that as long as this line was holding on the hourly for the Dow, the market has come off the lows of the day. So at some point, if we break below that line, that's when we can expect a bigger correction. Right now, we've ended another week where the bulls are still in control. Subscribers, be on the lookout for part 2, where we're going to discuss commodities, stocks of interest, and ETFs of interest, among other things and sectors, based on my research as I take a look at the charts again now that the week has closed. Be on the lookout for part 2. Otherwise, have a great weekend to everybody, and we shall see you in the new week. Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. E, a C, S, and so it is. Woo!